Good morning, and I welcome everyone to our second investors call for the financial year 2024-25. Apollo has been very committed to these quarterly calls for discussing the financial results and curbing your curiosities about the financials of Apollo for every quarter. I have Mr. Mikhil Inani, our Managing Director and CEO, and Ms. Diksha Nandyar, Whole-Time Director and CFO, to take up your questions. And Mikhil definitely have a few developments Apollo have had in this quarter from July to September. Mikhil, I would request you to take this over and let us all know the developments Apollo have had in this quarter.
Perfect. Thank you so much, Prachi. So what we'll do, right, is before we get, right into the Q&A, we thought this time we'll structure this conversation a bit. And as we always mention, we look forward to these calls for two reasons. One is we can actually share what we've been up to, and we have a few interesting things to talk about. And after that, we'll have a bunch of Q&A. Largely in these calls, we like to have a lot of interaction from our shareholders. So we really look forward to that. But before we get started, let me share a few updates, which has happened in the industry, and also, how Apollo has kind of dealt with it, and what are some of the positive developments that are. Just give me a minute. We have a little bit of a presentation. Let me share that. Just give me a second. Perfect. So guys, is my screen visible?
Yes, Mikhil, your screen is visible.
Okay, perfect. All right. So let's get going. So, one of the things which obviously happened in the industry, right, was a very interesting phenomenon where, we saw RBI being pretty active, right? And I think, we look at it in two ways, right? One is basically, uh, like we always say, I think, the regulator being active in this space is a very positive sign, because that kind of shows that this space is evolving from, the way I like to think about it, like from a small baby to now, a fast growing teenager, right? That's the way we kind of look about it. And with any kind of teenager, what tends to happen is that, the space sometimes ends up making mistakes, or ends up moving very, very quickly, where the regulator comes in like almost like a parent at this point in time, and kind of, ensures that any kind of growth which happens is actually healthy. So from that perspective, right, I think we recently saw that, specifically when it came to some 3 to 4 pretty large NBFCs, a couple of them also being in the digital lending space, specifically DMI and Navi, right? They were asked by the regulator to actually halt, lending altogether. And this is pretty large in terms of operations, right? I think Navi had a book, or has a book of anywhere between 10 to 11,000 crores, and DMI, of course, has a book of about 1,000 to 1,500 crores as per publicly available information. So why did this really happen, right? I think it was a combination of a bunch of things. One is obviously the pricing towards the end customers was pretty aggressive. But I think, as per our understanding, I think the major issue which RBI is really having here is the over leveraging of the borrowers. And what do I specifically mean by that, right? What I mean by this essentially, right, is if you look at the evolution of the digital lending space, it's typically evolved from a space where the ticket sizes used to be really, really small, in the space of maybe 5 to 20,000 rupees in ticket size. Um, and, usually when this space got started about 7, 8 years or so back, right, because the ticket sizes were so small, the players in the space had a tendency to not look at FOIR. So FOIR, basically for the uninitiated, right, is basically looking at how much is the borrower actually earning, and therefore, how much is he spending, and at the same point in time, what are his other EMI obligations, and therefore, what is the ability of the borrower to actually pay the EMIs for the particular loan that we are sanctioning. So early on in the space, because people didn't really offer large ticket sizes at that point in time, FOIR was pretty much ignored because the ticket sizes were really small. But obviously, as the space kind of matured, right, two things happened. One is the ticket sizes got larger, and obviously a lot of entrants entered this space, and because of which I think, as we went on and on, basically a lot of borrowers ended up getting, I would say, over leveraged, right? And what I mean by that is, there are certain borrowers who are earning, as an example, potentially 100 rupees a month, right? But they end up getting loans to the degree where they have EMIs worth 200, 300 rupees that month, right? Which is obviously highly unsustainable. So from that perspective, I think RBI has really come in and has been really hammering on the entire industry to lend in a sustainable fashion, so that we don't overburden these borrowers, right? And I think pretty much across the industry, if I think about it after this, right, there's been a few things which have changed, right? One is there's been a move towards obviously keeping FOIR in mind, right? To ensure that customers are not getting over leveraged. There's been moves to actually end up offering loans of much higher tenures, so that again, the EMI per month becomes smaller and smaller. And at the same point in time, there's also a big focus on making it affordable to the end customer by lowering interest rates, right? Again, moving on the angle of lowering the EMI burden of customers, right? So this is a little bit of, I wanted to kind of give an industry update. But at the same point in time, at Apollo, I think one of the things we've kind of established is, our nature when it comes to digital lending is, pretty conservative when it comes to these things, right? And, all of these things are no surprise to us, So let me talk about some of the things from our perspective, So when I think about Apollo, right, like, you know, let's look at the portfolio basically, right, that we've had, right, for the last quarter. And this is obviously way before, the guidelines, etc., came in from RBI, which really happened, I would say in last month or so, right? So when I think about it, we've always kind of kept all of these things in mind, right? Like I think number one thing when you think about it is the quality of the portfolio, right? Is, the focus has always been to lend to high quality customers. So you can see 94% of our portfolio is, of customers having bureaus of, 650 plus. At the same point in time, the most important metric that we always keep in mind is the GNPA, right? And our internal target is always to keep this below 2%. But right now it's way below that. It's 0.7, right? Which in my opinion is, probably top 5% in the industry. And also when you see the tenures and the ticket sizes, right? Last quarter, obviously this is for Q2, right? Where the average tenure is about 6.5 months and the average ticket size is about 44,000. But just as a future reference point, right? In the coming quarters, we expect both of these numbers to actually double, where we expect the average tenure to be, almost 12 months, and the average ticket size also to be more closer to a lakh, right? And additionally, obviously, when it comes to FOIR, which makes sure that the customer is not getting over leveraged in any way, I think we've always been extremely conservative when it came to these kind of numbers, right? Because I think this comes from a little bit of Diksha's DNA, which is from HDFC, right? Where our philosophy always when it comes to digital lending is that you have to keep the core principles of lending intact. And really what we do here is just optimize everything by 10 to 20x, right? Where we don't forget the roots. So as an example, in traditional lending, FOIR is a pretty important metric, and we've always kind of had that throughout, obviously, the last 7, 8 years that we've been in this space, right? And in many ways, what we see with RBI right now is a lot of those tactics basically in many ways being proven right, right? And I think as we go to the future, we expect a few more actions by RBI where a lot of the internal things that we've been doing for the last few years will again, hold us in good stead. So all of that, of course, let's see what that results in, right? Like, so, I mean, these are our results, right? I think we did share this earlier, but just as a quick recap, we are seeing pretty good momentum, right? In general, I think we are seeing growth, across the segment, and especially, I think we've always mentioned over the last few quarters that we expect our AUM numbers to go higher and higher, and they are pretty much following that as well, right? And as a future guidance as well, I think we continue the same thing that we had mentioned in the last quarter, that we expect these numbers to go even higher. I'll talk a little bit about how we are going about also from a fundraise perspective in the coming slides, but so far it's seeming pretty positive, right? I think all the effort that we basically put in over the last 7, 8 years, which has resulted in positive numbers both in terms of PAT and GNPA, is really helping us stand out from the competition when we are especially talking to lenders, because they are really appreciating obviously the high quality book and the patient way in which Apollo is kind of building. Because obviously, as we've seen, this quarter and in many quarters before that, right? Some of the more gung ho and popular names in the space who've been accelerating very quickly um, have been either red flagged by the regulator, or their revenue or PAT numbers have not made sense, much to the dismay of their investors, and some of these companies don't even exist anymore, right? So I think thankfully, I think the space is recognizing all of these things, especially the most important player, I think, in the space for us is right now the lenders. Because again, we see this as a good opportunity to, raise money at the right interest rates, so that, it all comes in the form of positive NIMs. And we can only do that by standing out from the competition, right? That's one of the core tenets, right? Otherwise, it's very difficult in this space to, I feel, build a valuable company unless you have a very solid value proposition where you can raise capital at pretty good prices as compared to the rest of the space. Talking about the fundraising, right? So I think last time we had mentioned that our goal was to basically raise about 50 odd crores. I think where we are today is we have sanctions worth about 66 odd crores. Some of the popular names out there are obviously ICICI, RBL, Vint, AU Small Finance, and I think there's a bunch of other NBFCs as well that we are talking to. And like we've received sanctions as well from them. I think the team is in different stages of conversation to finalize and obviously time the raise as well, in conjunction to the deployment as well. So I think things are headed in the right direction, and we continue to see like I'm saying, the momentum to be upwards and to the right. And opportunistically, wherever we get a chance, we will definitely end up scaling with the right set of LSPs and NBFCs, right? So some of the big updates for us, right? The last quarter was, I would say, full of action, because we moved into a new home. I'm not sure how many of you guys are familiar with our last office, but our last office was, our version of in a way, a garage. A very tiny little space, but it was pretty cozy. But given the growth that we've seen, and especially from the perspective of I would say raising debt, and having a nice home for our debt investors to come to, and obviously a nice home for all of our hardworking team members as well, right? We wanted to give them a space which we really love, and we're very proud of what we've ended up building. It's a pretty nice space. In case any of you guys are in town, would be happy to host you guys as well. But yeah, we actually did this space up directly from scratch. I wish we had photos to show you about the before, because yeah, the transformation that you guys would have seen would have been nothing short of phenomenal. I think in many ways it kind of represents Apollo, right? If I don't know how many of you guys are aware of, what Apollo was like maybe 8 years back versus what Apollo is right now. I think in many ways this office would be a similar transformation, right? So yeah, maybe I think we'll come up with a blog post for this, right? And we'll put up some before photos so that you guys get an idea of what it was like before, and what we kind of transformed this into. But yeah, we really like the space. It's full of sunlight, full of plants as well, and it's a great space for us to spend a lot of time and continue working for hopefully the next 10 years in this space at the very least, if not more. The last office, we were there for about a decade. So some of the new upgrades, right? Yeah. So one of the most common feedbacks that we've always gotten is why was your website from the 90s 70s or something like that, right? Because I think this came from a more philosophical point, to be very honest. I think especially with my background, given I've built a lot of consumer facing companies in the past, it's very very tempting to make I would say beautiful websites and spend a lot of time and energy on this stuff before you actually build a real business. But believe it or not, it took us almost 7 8 years to get this thing done, because before that, my focus was really on making sure this company is built on solid foundation. Only when we felt like the business is in a very very solid place, right, where we see now there is a clear path upwards, and um, there is a real business here, right? That's when we decided to do two big things, right? One is obviously the office, which you guys saw the photos before, and the second thing, of course, which we did was getting the website done um, to our satisfaction, right? So we really love our website right now. It's as you see, it's a lot of custom stuff. We've built it with a lot of love and care. It's I would say I would like to think it's pretty unique and pretty beautiful. So I would highly urge you guys to check it out. It in very very simple words kind of tries to explain what we do at Apollo, and yeah, I would love to hear your feedback as well. So if you have anything, please feel to email it to us, and we'll be happy to kind of look at that. In terms of interesting tech developments, we built something very cool. So it's an AI tool called Senti, right? So what this pretty much does, and this is a lot to do with compliance in general, right? So I think one of the big things which RBI has really been focusing on in general is um, how borrowers are treated, right? And I think what we wanted to do, especially given our business model, right, which is that we work with so many different fintechs and NBFCs, right? We really wanted to make sure that our customers are treated with the love and respect that we would expect, as an example, right? So one interesting thing that we ended up building out, props to our tech team here, which is a tool which basically takes all the audio call recordings which collection agents basically do, and basically converts that audio into text and runs sentiment analysis on top of that to determine the quality of the call, right? So if at any point in time we observe that there is a call which where we felt the collection agent was rude, or didn't speak to the customer up to the satisfaction levels of Apollo, we can immediately have one of our team members kind of reach out and make sure that the customer doesn't feel that they've been talked to badly, apologize if needed, and really placate the situation. So this has been pretty early. I think this has happened only over the last, I would say specifically maybe 15 to 20 odd days, but it's been pretty positive in terms of internal usage. But most importantly, we feel like it's going to be adopted by a lot of our partners as well, because they need all this compliance tool as well. Because obviously, RBI always asks these questions, right? How do you kind of keeping a watch on the collection call centers that you have, right? And it's obviously an unscalable thing to do from a manual perspective. So it's a pretty good AI tool that we built. There's a lot of engineering which went in to obviously understand, all kind of Indian languages into this, right? And this has been an R&D project for us over the last, 2 to 3 years. But it's good to see that it's finally ready for production. And obviously all the AI advances which have been happening across across the world pretty much have really helped us ship this out to production in a economical fashion as well, right? Because I think a lot of these things were possible, but sometimes were just pretty expensive to get it out to production. But thankfully now, thanks to the processing power being available and models being available at very very cheap cost, when we consider this was actually manually looking at these audio calls, I think now I would say from a price perspective it's easily 10 to 20 times cheaper. So yeah, we're pretty excited. I think it's going to be something pretty powerful, and we hope a lot of our partners end up adopting it. And we're seeing some interest as well from people who are not even our partners, to look at this as well. Um, and it has a lot of applications, I feel, right? I think obviously the first one that we're looking at is, of course, our own use case, which is the collection call centers. But we feel it can be really powerful even from a customer support standpoint, right? Maybe an e-commerce company, when calls happen between a customer support agent and a customer, and if the call is going negatively, the e-commerce company can actually have another, maybe a senior manager, call up the customer to make sure that those relationships are protected as well, right? So I think the use case is pretty wide. Obviously, like what we like to do here at Apollo is target one very specific niche, really make that world class, try and dominate that space, and then maybe go a bit more wider. And that's the same tactic that we're going to apply when it comes to Senti as well. Finally, I think we don't do this quite often, but we thought we'll mention this here, right? As I think we're pretty much known for, our team is pretty compact, and it's not huge by any means. I think today we have about 28 to 30 people in the organization, but we are hiring. So I thought since we hire very rarely, it's a good opportunity for us to kind of highlight this, especially the kind of position that we're hiring for. So in case any of you guys are interested, or you have friends or family, or anybody in your circle who might be interested, please ask them to kind of reach out. We're looking for high quality and high intent people to kind of come in and join us in this team, as well as we of course have big plans over the next 12 to 24 months to really scale up Apollo right now. So we feel it's a good time to kind of add a couple of good team members as well. So with that, I kind of want to pause, and now I'll open it up for any questions, from the audience, and we'll take it from there.
Hi, good morning, everyone. I think we're open for taking questions. So you can either raise your hand or you can drop in a question in the chat bot and we'll be happy to take it over. Okay, so we have one question from Mr. Nitin Sethi. We'll allow you to talk and you can ask your question.
Hello. Hi, am I audible?
Yes, Mr. Sethi, you're audible.
Oh, Nikhil, first of all, and Diksha, congratulations on good set of quarter two results. My question is about when will actively start co-lending with our partners? I mean, we have given them the term loan, but when do we expect our partners will do co-lending with us? And what sort of range of revenue we can expect from that?
That's a great question, Nitin. So I think our strategy in general is that whenever we give out term loans, in majority of the cases, the goal is obviously to, from a long-term perspective or a medium-term perspective, even to do co-lending, right? I think we already have a few partners which are live from a co-lending perspective with us. I think when it comes to others, what we are trying to do with some of them is make sure that right now our underwriting basically works for them, right? Because like I mentioned as well, right? We're pretty conservative when it comes to our underwriting, and in certain cases, we want to make sure that that actually leads to a fruitful portfolio with them, right? And sometimes that can take a bit of time because they may have to tweak their sourcing as well to in order to fulfill the kind of what's the right word for it? Maybe KPIs that we want to have for the portfolio, right? As an example, we have a lot of clear outlines that we have in terms of the performance of the portfolio that we're expecting, and that can sometimes take maybe a month or two to kind of establish, right? So I see all of these things happening in the coming quarter.
And what sort of revenue we can expect from that after we can go live with them?
I think from a revenue perspective, right, when I look at co-lending, it kind of ends up becoming a couple of things, right? One is obviously there is some API revenue that we end up earning. And obviously from an ROI perspective, we can potentially charge anywhere between 17 to or 18% on the capital that we kind of provide to them. So that's kind of how it works. I think when I compare term loans to co-lending from purely a revenue perspective, I think the major differentiator between the two is, I think in co-lending, the added benefit is obviously the API use, right? So the revenue that we earn from co-lending can potentially be obviously much higher. So there is definitely a strong interest in kind of establishing that. But we just want to do it opportunistically once we have obviously the right portfolio which we can establish with them.
Okay, thank you, sir. Sir, one last question.
Sure.
Our partners are also doing some type, mostly micro loans we are doing with borrowers. But you have said that in future you have plans to enter into vertical lending products like into particular healthcare industry, or people are selling a particular product, have a lot of insights about particular borrower. When we can expect that type of partners in our list?
Actually, we do that already with some of our partners, right? I think, let me put it this way, right? Some of the partners that we work with, I think it's not necessary what they do with majority of the book. That's what they're doing with Apollo. As an example, one of the partners that we work with, they're the one of the largest, personal loan players out there, right? But there are some products that they're launching which are not, I would say, public yet, but they are more use case focused, right? Maybe potentially in the EV space, or it can also be in the healthcare space. So, we are evaluating those kind of partnerships as well. So I think there is a lot of interest from the space to kind of look at what's more possible other than just doing a pure PL. And sometimes, given our tech expertise and I would say our good relations with some of these people, right? I think when it comes to some kind of products that they're launching, which may be innovative, Apollo usually is the first lender that they end up calling to try and establish a pilot. So these are few things that we're already working on, and I think in the coming quarter or two, this will become more and more apparent. But even today, as an example, I would say almost 30 to 40% of our book today is with lenders who are lending to kind of audiences where they have a lot of information about, not just just doing a pure PL with these guys.
Okay, thank you, sir.
Sure.
Thank you, Mr. Sethi, for your question. We have another question from Deepika. Deepika, I'm allowing you to talk. You can please go ahead and ask your question.
Yeah. Hi, am I audible?
Yes, Deepika.
Yeah. Thank you so much, Mikkel, for such a brief presentation. It was really helpful. I have one question. As Apollo is planning to expand, could you please share details on the sanction letters Apollo has already received in terms of borrowings? Additionally, what are the company's future plans for fundraising or raising further capital?
Sure. Thanks for that question, Deepika. Yeah, absolutely. I think, so far it seems that, as I mentioned in the presentation, right, I think the fundraise is going, better than expected. I think our goal, as we had mentioned in the last quarter, was to, potentially get to about 50 odd crores of raise, right? I think we've been fortunate that I think we have about almost 70 odd crores of sanctions, I think 66 crores to be precise. And hopefully that number only goes up, right? I think our goal right now is first to obviously absorb some of this capital and deploy that, right, which will obviously lead to a jump in the AUM. I think going forward as well, right? Like I don't like to kind of give precise numbers because we're pretty conservative in our outlook. But in general, one of the things I can mention is that in the quarters ahead, one thing which is looking extremely positive is the fact that our AUM will keep climbing because we are seeing opportunities out there to deploy capital strategically, and I think the debt part also looks like it's headed in the right direction. So these two things coming together just means the AUM should further rise, and of course that should reflect positively on our numbers as well.
Got it. Thank you, Nikhil.
Thanks, Deepika, for asking the question. We have another question from Mr. Mohit. Mr. Mohit, I'll allow you to talk and you can go ahead and ask your question.
Hello, can you hear me? Yeah. Hey, Nikhil, thanks for allowing everybody to join this call. I have a question on like a broader digital lending space. So I currently work with a fintech company wherein we are trying to onboard a few lending partners for the personal loan segment. So what and we have spoken to a few market leaders and everybody is only keen to provide loans to prime customers only with good civil score. But the problem is that if a person with a 700 or 680 plus civil score, every bank will be ready to give them loans and at a competitive price of say 10-11% kind of. And in that similar scenario, and NBFC will be charging them somewhere around 18-19 percentage. So the only benefit with NBFCs and will be that it will be an entirely paperless journey and loans within minutes, whereas bank will do their due diligence and things like that. But how do we cater to a large population of users who are who don't come in the prime segment? How what should be the next model that everybody can adapt by with underwriting and things like that? What do you think about this situation?
Well, that's a great question. I think you're absolutely right. Right. Ultimately, see if you're an NBFC and you're targeting customers which honestly are going to be served from a bank, I think you're in trouble. Because it leads to a negative bias where essentially what will end up happening is the kind of customers which will borrow from you are probably customers which are either getting rejected from a bank, or it will be a situation where they've borrowed from you and the bank and they're all leveraging themselves. I think what everybody has to do, right, is they have to figure out their own specific niche, right? You can't go after the same customers essentially, right? In many ways, that's the trouble in the industry today. right? Where everybody's going after the same customer, and that's leading to basically FOIRs going through the roof, right? Like people are lending at 200% FOIR, 300% FOIR, like, that's crazy, right? Basically, because the person, it's like saying that person's salary is 1 lakh rupees and you're lending in such a way that he has EMIs for that month for 2 lakhs. How is he ever going to fulfill that unless he's rotating money by, borrowing from 5 other apps? So I think what people have to do over here now is they have to target very, very specific niches, right? Where you have to develop a use case which attracts a certain kind of customer, and you have to lend for a specific end use case, right? So in my opinion, what has to happen is two things. One is you have to develop an app or a website or something like that, right? Which is solving one kind of problem for the customer. It attracts that kind of customer to come and use your app or a website. And in that use case, you end up lending to them. Like it could potentially be you're a payment gateway, right? And you have many merchants as an example, using your payment gateway to get payments. Now, depending on the amount of revenue this person earns, you can decide to lend to them. And from the payment that this merchant is receiving via your payment gateway structure, you deduct your EMI, right? That's one example. Another example could be if you're, say, Zomato, right? And, you have so many restaurants which are working with you. Now, if a restaurant wants to expand, maybe it'll struggle to get a bank loan, right? At least to the degree that they want. You could lend to the restaurant and then again deduct from the revenue that you're generating, in terms of orders from the restaurant. I think this is what is the need of the hour, right? You have to develop more than just a simple app which gives out loans, because if you do that, then there is no moat, right? Anybody can build an app in 3 days and launch and start giving out apps. And if you give out money on the internet, it's no longer, I would say, 5 years back where the space was not crowded. Today the space is crowded, right? So it's very, very important to have a very clear use case, and you only focus on that set of customers and lend for that use case, because then you can avoid the situation of FOIR. Because if you want to differentiate from banks, you can differentiate with them by this use case lending, because it's very, very unlikely that a bank will end up building an app or a website to serve a use case and then lend on top of that use case. They don't have the interest in doing that. It's too small for them. So in many ways, I would go back to first principles of building any kind of thing on the internet, right? The golden principle of building anything in the internet is you never go big in the start. You always go narrow and deep, right? So that's the same strategy which should be applied even in lending.
Thanks, Nikhil.
Sure.
Thank you, Mr. Mohit, for your question. We have another question from Mr. Mukesh Kothari. Sir, I'll allow you to speak and then you can ask your question.
Hello.
Yes, you're audible.
Yeah, hi. Just a couple of questions. See, in your first slide in the presentation, you mentioned that your average lending rate is 33%. I didn't understand that. I mean, so is it yield or what is it? I mean, what is the 33% you're referring to?
33% is the ROI that we end up average ROI that is charged to the retail customers who borrow from us.
Isn't it too high? I mean, 33%. I mean, 1/3 of your principal you're charging as interest.
Yeah, I can understand why you feel like this, right? I think when I entered the industry as well, this was my first initial reaction. But the reality is that, what tends to happen is you're serving customers, who don't have any other alternatives. So as an example, when I look at some of the average prices across the space, right, it's shockingly in the 60 to 70% range, by the way, which, which of course is madness, right? And that's one of the reasons by which, RBI is basically, come out and try to basically get this space in order. And unofficially, basically, whenever, you think about cap of rates, right, it's usually 36%. So I can understand why you think this space is very, very expensive. But the reality is, from industry benchmarks, it's almost half, right? And the reason why, in general, digital lending is more expensive is because of the question which came earlier from the from I think one of the other shareholders, right? Which is, in this space you have to go after customers which are not getting served by the traditional banks, because if you overlap that, right, it leads to a negative bias where you'll end up getting customers who are actually supposed to be served by banks, but because they are not being served, you're getting the worst of that category from a bank category, right? So ideally what you'll do is you'll have to go after somebody who is basically not getting served at all. That entire segment is not getting served by banks, and that's when you can lend.
Okay. And so what sort of, usually high interest rate would attract subprime customers.
Yeah.
I mean, I understand 650 plus CIBIL score and all that, but that is more or less a post facto thing. I mean, where a customer's credit get repaired and all that. But at this sort of rate, you would get subprime customers, and you would have a challenge in terms of maintaining NPS in the long run. I mean, the short run, it could be fine. So what sort of filtering do you do to onboard these kind of customers?
So that's a great question. In fact, this is something that we pride ourselves on, right? I think in general, when you look at the history of Apollo, we've always had really, really good GNPA numbers, right? And the reason for this is, to be very honest, you're absolutely right. When you scale a company to potentially say 5,000 to 10,000 crores AUM, it can become a huge challenge. As an example, to have the right kind of GNPA numbers, right? Because as in, there is, in my opinion, I don't think, unfortunately, today you can build this kind of book today. By having the right kind of GNPA numbers. That's the kind of, or let me put it this way: I don't think you can build a 10,000 crore book today with the kind of GNPA numbers that Apollo would be comfortable with, right? So what we do, right, and our strategy in general is that whenever we work with any fintech, any NBFC, we only go in and pick up their top 10% book, right? So as an example, we could work with potentially an NBFC who may have a 5,000 crore book, who may have a very, very large book, right? But we end up picking up only maybe 50 crores or 100 crores of their book, right? Because when we apply our fine comb, right, and this fine comb is not just looking at, or not just having a policy. So there are a couple of things that we do, right? One is, over the last 7 to 8 years, we have a lot of data internally, which, very, very clearly tells us what will happen when you apply a certain kind of policy. So it's almost like I would say it's a class, in machine learning terms, it's a classification model that we have built, right? The way you think about it is essentially, exactly how your email works, right? In simple words, basically imagine when an email comes in and Gmail basically classifies an email as either primary, marketing, or sometimes spam, right? That's exactly how our algorithm works. And it takes into account, two big things. One is obviously Apollo's internal data. Actually, three things, right? Apollo's internal data over the last 7 8 years. Second is real-time data. So every day we get repayments, and that modifies the weightages in the model. And the third is looking at all of the companies which are out there, and whenever we evaluate companies, right, we get all the portfolio data from all the companies, and that further gives us data to put into the model. So when we put all of these things together, it really helps us basically come up with the right model. And in simple words, what that has led to is basically whenever we look at any NBFC or fintech or any kind of lender that we work with, right, we really don't care how big they are, because from our perspective, they could be a 10,000 crore NBFC, they could be 1,000 crore NBFC, but usually what comes out when we apply our algorithm on top of it is we will be potentially able to serve only 30 to 50 odd crores of their customers. And that's what ends up happening. And you can do that, I feel, as long as your portfolio today is about 1,000 odd crores. I think that is our internal thought process right now, that you can apply this level of fine comb as long as your AUM is about 1,000 odd crores. I think what our expectation is, every year the market is expanding, becoming much, much more mature, right? So, a market which, is potentially 20,000 odd crores is growing at the rate of potentially 30 to 50% every year, right? That's been the run rate so far. So we feel our numbers will also grow accordingly, right? Because this fine comb will be able to, the top of the funnel will go on increasing, right? And if our target is the top 5, top 10%, that number goes on expanding as long as the market expands, right? So the criteria, in short, is to be very, very data heavy. Number one, in your processes, it's not a human job, right? I just feel like the minute you have humans, it leads to biases, errors, all of that kind of stuff, right? So it's very, very important to be data heavy in this. And second is, I think the oldest thing in the world when it comes to lending is you have to be patient. It's a new space. We never forget that. Just because we've been around for 8 years, it means nothing. I think we have a very clear timeline that it will take 10 to 15 years in this space for this space to become mature, right? I think anybody who's accelerating before that is headed in a dangerous direction, right? And this goes back to a lot of questions we've gotten in earlier earnings call as well, right? Like, why aren't you guys building a 500,000 crore book tomorrow, right? Why don't you raise capital and do it? This is the reason why, right? Because we don't want to raise and build a book which is subpar quality. It doesn't really align with our very simple thinking that you need to build a great book. If you build a great book, you can attract amazing lenders at really, really attractive prices. If you have money at attractive prices, you can again go back and build a good book because you will be able to attract good borrowers, and that cycle continues. If you do the opposite, which is you have a bad book, you will attract borrowers at high prices. With those high prices, again, you'll have to go back to negative borrowers, and that will lead to a bad book, and this cycle will continue. So we are very, very clear what cycle we want to go on. So that just should explain some of our thinking.
Fine. I think hopefully this model sustains or is able to withstand a couple of down cycles to see whether it's working fine or not. So my second question is basically, I mean, you have recently raised 15 crores, of which if I see the cash balance as on 30th September, you still have 14 crores left. So will you be deploying this in this quarter itself, or how is your what's your plan of deployment?
It's it's sharing information about the I guess the current quarter that we're in, but I mean, I guess I can because this is called, it's already deployed, right? It's already deployed. So yeah, like I think when this quarter's results come out, hopefully you'll see that. So yeah, we don't expect a lot of negative carry, if any, especially to the degree like that, right? Maybe like 3, 4, 5 crores or something like that. But never to this kind of degree. So I'm not too worried on that.
Okay, fine. And I mean, one more question is basically on the sanction letters that you have got. So what sort of loans are these? Are these similar to the term loans that you give out to your lending partners, or are these payable on demand, or is it like a fixed tenure kind of a loan?
It's
I mean,
a fixed tenure.
Longer tenure. Is it a longer tenure loan? Because then you would carry the interest rate risk.
No. It's. I mean, these are like maybe anywhere between 1 to 3 years. So it's not something which we feel. We're not too uncomfortable on the NIMs anywhere, right? Because our in general philosophy is, see, very honestly, like on that question, right? We don't borrow wherever we feel any degree of stress, right? The goal is not to, I think one thing which is very apparent with Apollo is we don't scale recklessly, right? Like I'm not one of those, we're not one of those people basically who want to be, growing at like 1-2% NIMs and things like that, right? I don't think it's worth anybody's time. So whenever we borrow, it's pretty comfortable in terms of NIMs. I don't think we're worried about interest rates as such in general. I don't think that will have, I mean, if interest rates, anything happens, I think, it all automatically gets adjusted, right? I think it can get adjusted at the partners level as well and the lenders. So I think the NIMs will be maintained. So I'm not too worried in general about those things.
Okay. So you intend to scale up by borrowing from these and deploy by, I mean, what sort of book are you looking at by end of this year, March 25? I mean, right now it is around 68 crores. So would it be around, say, 100 odd crores by March 25?
I don't like to give, kind of these kind of numbers. I can tell you it will be definitely much higher than it is today. And, I would say, I would conservatively put it at 100. I think I feel confident saying 100. Internally, we are pushing for more. But I think 100 is something which is definitely achievable.
Okay. Okay, fine, fine. Thanks. All the best. I mean, just one
Yeah.
observation. See this. I mean, even in the last quarter, when RBI had concerns, one of the concerns was the high lending rate that these NBFCs lend out to. Plus, besides, of course, over leveraging. So probably we'll have to look at how to reduce these lending rate, because I think this will attract definitely subprime customers, and in the long run it might not be sustainable. I mean, of course, the feedback from the model we would know only at a later point of time, when the book actually goes, or it gets curated over two cycles. I mean, so I mean, probably you'll have to look at the way the interest rates at which you're lending, and then take a call. I mean, just a suggestion.
No, valid suggestions. I think just a couple of points on that, right? I think you're right from an RBI perspective. These rates again, to a common customer, it may seem pretty high, right? I think, but the reality is, as an example, people like Navi and TMI, I think, are lending at rates almost double of this. So I think that's where RBI is coming from, right? I think that's really the challenge that they've been trying to kind of solve for, without being very prescriptive and actually just giving a proper interest rate. So again, we're pretty comfortable at the rates that we are kind of lending at, and we have pretty regular interactions, obviously, with the Let me put it honestly, right? I think every single digital lender today who has a license, once a month there is a interaction with RBI at the very least, right? So I think we have a lot of feedback coming from them, so we feel pretty confident in terms of the numbers today, and it's something which RBI is comfortable with. As you can imagine, they're obviously not comfortable when the numbers are beyond 60%, which was the case in certain companies, and that's why they've taken certain actions which are public. I think on the next point on the model, right? So it's not something that, I mean, obviously the model will keep evolving, and we by no means feel like the model is Einstein or anything like that, right? I think, like I said, we think it will take 15 years of anybody being in a space to really understand all kind of cycles and everything, right? I think a couple of cycles is also too early. But fortunately, I think we've been around for 8 years and we've only done digital lending. And we've seen, I would say the model has seen a lot of cycles, right? Because in 8 years, you can imagine, at some point in time when the space started, I think the average duration of the loans used to be like, sometimes 2 to 3 months. So it's seen a lot of cycles. I think it's only over the last 18, 24 months, our durations have become now 6 months. And I think now potentially next quarter average will end up becoming 12 months, right? So fortunately, I think the model has gone through many, many cycles already. But I keep your point, obviously, right? I think in the end of the day, I don't think even 8 years is enough. I think, again, potentially it takes for anybody to prove their mettle in this space, right? I think time is the ultimate thing. So we are very clear that, once Apollo reaches potentially 10 years, it will be one kind of milestone, but maybe 15 years will be a good milestone as well in terms of checking the robustness of everything that we do, right? Because ultimately, I think you can be lucky for a few years, but I like to think that it's difficult to be lucky over a period of 10 years. And I think it's if you do it over 10 to 15 years, I think then you found a science to it, and it's not just luck.
Good, good. All the best, Nikhil.
Thanks.
Thank you, Mr. Kothari, for your questions and insights. I think we don't have any more questions. We'll just wait for 30 seconds more, and then we can conclude with the call. So if any of the participants have any additional questions, would be happy to take it. So we don't seem to have any further questions. I would just like to thank all the participants and attendees for joining in Apollo Finvest Quarter 2 25 call. It was great hosting everyone. Thank you so much for your time. If you have any other questions, please feel free to email those to us. We will be happy to address the same. Thank you. Have a great day and a great weekend. Bye bye.